everybody. Welcome to the Trading Market Technicals morning call video for Tuesday, January 15th. Another quiet day. Very little movement. We are consolidating on the upper end of this range here, as you can see here on the SPY 10-minute chart. But I think something big is happening. Is going to happen. We have a lot of consolidation, very little movement. Extreme complacency, which telling me that there is going to be a bigger move. Unfortunately, it doesn't tell you what direction that we are leading. But I do see that it could be a little furthermore risk to the upside. But I do see some sort of a sell-off in the cards here. Real quick on the numbers: S&P down 1, Nasdaq down 8, and Dow up 18. Nothing has really changed. I'm not going to get into a lot of indicators today. I'm not going to waste anybody's time. We are really, literally, virtually the same where we were when I left off on Monday morning's video. But I do want to show you a couple things that I did see doing my analysis at night. And I want to run into this NYMO real quick. And as you can see here, just to show you, we are literally back where we are. We're in this 30 area. Again, we are not overbought. We are not oversold. Slightly overbought, if anything, but really not much to really talk about. I like to see us break this area here above 60 into the 70, 80, 90-ish area here, and that'll give me a nice extreme overbought reading, and or down here if you were looking for a sell, an oversold reading. But we're really stuck right in this middle area here. But it does tell us that we can move higher. And there's plenty of room to move lower. Now let's take a look at copper. Copper sold off yesterday. Had this little bull flag into this symmetrical triangle, and as I showed you yesterday, there's a large symmetrical triangle still within that range. So really, it's nothing really major happened. However, if we lose the 20-day, we could actually run down a little bit more and test this confluence area of support with the 50 and the 200-day moving average. So copper seems to be a little weak the last couple of days, and if we do break down lower, that would help equities to sell off at least a little bit for a day, another 2 days. So again, I would not be aggressive to the long side. I've been stressing this out for the last week. Last week or so. If you're looking to build a long position, if you are in a long position, then maybe just tighten up the stops or buy some puts for protection. Obviously, day traders, it really doesn't matter. Let's take a look at the VIX, and I wanted to mention the VIX. VIX put in a black candle, possible reversal. If you can see the black candles here, reversal, black candles back up, black candle reversal. So something is happening here. I'm not saying that I'm not calling for a major sell-off. We had Bernanke speaking yesterday, and I think he does speak a little bit today. Little or no reaction at all to the futures. S&P down $1.75. A lot of the commodity block currencies are very, very, very quiet. So something to me, when you get that lack of movement for a week to 2 weeks, it just energy is building in the markets, and it's going to need a catalyst to move one way or the other. But that's my red flag to say, hey, I'm using a word of caution here. Okay, CPC, Chicago Board of Options, total put call ratio. And as we get lower and lower, to me, that's a contrarian sell. We did get a little bit of spike yesterday, but not really much. We're still extremely low. Very bullish reading for the markets. But again, if you're a contrarian, this is something that you want to watch out for. Okay, now I want to go into the equity. Let's go into the sectors. And as you can see here again, we are consolidating above the upper end of this range here, right? So we do have a parallel channel. Bullish. No question about it. I mean, this is actually really good. Holding this area. But we consolidate another day or two. If we can consolidate within this channel and we can break out of this 147.15, call it, on volume, then you're going to start your other leg up to at least retest the highs into the 1500 area. We do have an inverted head and shoulders measuring 1513. Okay, but let's take a look at this. As you can see here on the S&P, we have an inside day. Again, from the previous 2-3 days, our CCI is rolling back under 100. Lack of momentum. Momentum is waning. Again, guys, use just a word of caution here. Our inverted head and shoulders on the 60-minute S&P cash measures up to 1513. Seems fine, no problem. We are consolidating. If you look at now this is a 60-minute chart. So you have a good 8, 9, 10 days, really, even though we're 2 days above the upper end of the range, not that much. We're still 1450, so within a 30-point range in the last 10 to 12 days, actually since the beginning of the new year. And this was this fiscal cliff issue being resolved, at least on a temporary basis. The market's actually pushed higher here. So again, still bullish, and we could still pull back and still have a bullish configuration here and still go up to that 1513. And I think that being in this range for so long, a pullback, and it's always healthy to have pullbacks within an uptrend and or rallies within a downtrend. So it's healthy because it just rebuilds energy for that trend. Now, take a look at the S&P 30-minute chart. Bollinger Bands are tightening up again. We did have that one big move, as you recall, 2 days ago. Now we're back into this, and it's the Bollinger Bands are tightening even more. Again, just want to reiterate, it does not indicate which way it's going to break, but it just tells you that energy is building in the markets, and another move is likely, is actually imminent. And I wouldn't be surprised that we move this week, because we have some banks coming out, a lot of earnings are starting to come out, and I think that's going to be a big market driver. Now let's take a look at our diamonds, which is the ETF for the Dow Jones, chugging away real high, broke out of this little area of resistance. Really nothing to say other than lack of volume, and we are overbought here. So again, a word of caution, but we are just kind of just grinding higher. When you have lack of volume and lack of news and there's no catalyst, we had nothing really economically to report yesterday. And the last few days we just kind of grinded. When there's no volume, markets tend to shy to the upside, just grinding higher with no volume, no catalyst. So nobody's really looking to do anything or put their risk out there. Generally, the market does move higher, and this is what's happening here with the Dow Jones Industrial Average. And our transport's looking real nice. Like I said, the longer-term picture, pretty constructive, at least for now, unless something changes. The longer term, when we do our long-term overview on Mondays, we are looking pretty nicely here. And this is just moving up here in the upper end of this Bollinger Band. We broke out of this range. But we have gaps, lower gaps in a lot of these key sectors that eventually will need to be filled. Now, it doesn't have to happen today, tomorrow, next week. Could be 5 months from now. But we do have some gaps, and you need to take note of that, which eventually would be filled. And I'd love to see these gaps be filled before we can get long again. I mean, really aggressively long. IWMs, 87.39, inverted head and shoulders. Again, as you can see, these repetitive patterns, inverted head and shoulders in a lot of these key sectors. 89.50 is a measurement here. We're not that far away from it. And now, again, we're back above this area, just consolidating here. Looks like energy's building, looking for another move. But look at the stochastics, 95. And we're up 1.18 up in this area here in our MACDs. So we're quite overbought, and it could definitely use a rest. Even if we get to this 20-day moving average, that would be the upper end of this gap area here, this little consolidation area. So something to keep in mind while you're trading intraday. Always like to see where we are intraday, and that's going to put me in a mode, okay, am I looking to buy stocks? I'm looking to short. And if it's the opposite, I'm looking for relative weakness to what the market's given me that day. Now let's take a look at Apple. And I think Apple here is in trouble. I mentioned to you yesterday, and mentioned many times, I'm staying away from Apple. If you wanted to, I would wait for Apple's price to get to the bottom at the lows here at 501. That's where we are now. Looking at an ugly day yesterday, I would not be looking to pick a bottom. I'd honestly look to stay away. If you're short, stay short, because I do think that Apple's going to test that second trend line in the 460-ish area. And I'm going to show you why on the daily chart. But this is an ugly, ugly chart, and I think Apple is in trouble. I think Apple has further to go to the downside. Yes, there may be some pops here and there, but I think this is where it wants to go, 460-ish area, anywhere in this 460. If I had this for now, probably we had a good month and a half. And I'm going to leave it here just to see where this thing goes. Unless something changes in the fundamental front of it, any kind of type of catalyst, some positive news, Apple needs something to revert to this, start making some higher highs and higher lows, and it has not happened yet. Big ugly day yesterday. I'm surprised too. The news yesterday with J.P. Morgan about how they're cutting their inventory. That was really old news. But again, when that happens, and you just continue to see bad news, at least so to speak, to what the market participants are thinking. It just doesn't matter. You can't get out of it. It can't get out of its own way until it shakes it out and it really capitulates. And this is a weekly chart of Apple. So as you can see here, we're not going to have big volume at the moment, but let me show you the daily chart and let me show you why I think Apple goes a little bit lower. We have another head and shoulders pattern here. We had one up in here. This is the big one that we called in the 695-ish area. I said, guys, just saw a head and shoulders pattern. Be very careful. And we had some divergence in here, which we called on the weekly chart. Then we roll back down, and we actually have another little head and shoulders here, here, and here, which I don't have labeled. But now we have another one here, here, and here. Our neckline comes in at 503 and measures into the 460-ish area. That's why this is just giving me reason. We also have a descending triangle. I made this a little darker. If you can see here, the neckline is going to be your bottom trend line. So we have a descending triangle on top of a head and shoulders pattern. Now, typically, I don't like to see head and shoulders pattern on the bottom of a lower end of a move. But that does not mean that it cannot work. It's just less reliable and it's less fierce. But we need to see that capitulation. We haven't seen it yet. If you look at all of the volume bars here, we have not seen it. But look at yesterday. We did have a nice big volume spike yesterday. Over 25 million shares traded hands. But if you look down across, you see that's basically average on some high volume days. I want to see this into the 30 million, 35 million. Big long capitulation candle and a nice little wick on the bottom. Then I could say we might have some momentum to the upside. And again, I don't think you're going to see, as this market goes lower, as the stock goes lower and lower, 600 is going to be a real long shot for the moment. And now we're at the 200-day moving average here at 597. So Apple's in trouble. I think it continues to go lower, and I think you're going to see 460-ish area, and that's where I see you're going to be a better buy. I would see in the 460-ish. I would definitely put Apple as on my radar to be long. Eventually, Apple will eventually decouple from the Nasdaq, because Apple, as long as they have continued to have problems or at least some negative news out there, other tech stocks are going to continue to hold hold the Qs up, and that's exactly what we see here. For now, Apple's still giving it problems. Outside day in the Qs, so I think the Qs goes lower. I think the market goes a little bit lower here. I'd love to see at least 3% pullback, 4% pullback in the market. Put a little fear out there, and then look to buy the market into early first quarter, into the spring, and then sell in May and go away type mentality. But we'll see. Right now, markets are not afraid. Extreme complacency, guys. This is something that we really need to keep an eye on, because we can literally turn on a dime here. And there's only one door. When the door is open and everybody wants to get out, the herd mentality, if you know what I mean. So just keep a little word of caution for the longer term guys. Tighten up your stops here. Or if anything, just be aware that, hey, look, if the market's going to break this certain area in the S&P, I'm going to start liquidating half of my portfolio. You don't want to ride all your gains into, to a flat area on your portfolio. All right, guys, use caution. Watch that Apple here, and we'll talk to you tomorrow. Take care.